Good day, everyone. I am Janine Chorigo Sabaton from BSA IS2 Block 1, Group 1. So today, we're going to tackle about the minimum corporate income tax with my co-partner, Miss Michelle Evangelista. So let's start. So what is MCIT? MCIT is imposed whenever such corporation has zero or negative taxable income, or whenever the amount of the MCIT is greater than the regular corporate income tax due from such corporation. So the MCIT is imposed where the CIT at 25% less than 2% of MCIT on gross income. So the MCIT is equivalent to 2% of the gross income of the corporation. So why is there an MCIT? To address the perennial problem of non-declaration and under-declaration of revenues by corporations. The comprehensive tax reform provides for the composition of a minimum corporate income tax. So it is not a new tax imposition as it merely approximates the amount of the income tax which is payable by a corporation. The MCIT is meant to ensure that business earning positive returns do not avoid paying the income tax. So, when is MCIT reported and paid? It is paid on a quarterly and annual basis. So, it is paid on an annual and quarterly basis. It is reported under the annual final adjustment income tax return, which is corporations are required to file on the 5th of the 4th month following the close of its taxable. Who are covered by MCIT? So there are two corporations who are being covered. First, the domestic corporation, and the second is the resident foreign corporation. First, domestic corporation is a company that conducts its affair in its home country, and the resident foreign corporation which establish its physical presence in the Philippines. So, example of the resident foreign corporation is they engage in trade or business in the Philippines through a branch or an office. For corporation covered by MCIT and preferential rate, MCIT shall only apply on the part having regular income tax. Who are not covered by MCIT? PHAI, foreign currency deposits units, 10%. Then firms that are taxed under a special income tax regime such as PISA law and the Basis Conversion Development Act. And the fourth is the international career. Number 5 is offshore banking units. And the 6 is the regional operating headquarters, because the MCIT is imposed only domestic corporations that are subject to regular corporate income tax. So,
Good day, ma'am. I am Michelle Evangelista from BSAIS Block 1. So I am from Group 1, and our topic for today with my co-partner Janine Watton is all about MCIT, or Minimum Corporate Income Tax. So this is my part. How is MCIT computed? MCIT is 2% of the gross income of the corporation at the end of the year. So the MCIT is applicable only in the fourth year of the business operation. In the computation of the tax due for the taxable quarter, if the computed quarterly MCIT is higher than the quarterly normal income tax, then the tax due to be paid for such taxable quarter at the time of filing the quarterly income return should be the MCIT as the end of the taxable quarter in the payment of said quarterly MCIT. Excess MCIT from the previous taxable years shall not be allowed to be credited. Expanded withholding tax, quarterly corporate income tax payments under the normal income tax, and the MCIT paid in the previous taxable quarters are allowed to be applied against the quarterly MCIT due. So what is the carry forward provision under the MCIT. Any excess of the MCIT over the normal income tax may be carried forward on an annual basis and be credited against the normal income tax for 3 immediately succeeding taxable years. So what does a corporation start to be covered by MCIT? A corporation starts to be covered by the MCIT on the 4th year of its business operation. So the MCIT can be computed only in the 4th year of the business operation. So, when does a corporation relieve from MCIT? The Secretary of Finance, upon recommended of the CIR, may suspend the imposition upon submission of proof that the corporation sustained substantial losses on account of, first is the prolonged labor dispute. So, a labor dispute is a disagreement between an employer and employees regarding the term of employment. This could include disputes regarding conditions of employment, fringe benefits, hours worked, tenure, and wages to be negotiated during collective bargaining, or the implementation of already agreed upon terms. So next is the force majeure. So force majeure refers to a clause that is included contracts to remove liability for natural and unavoidable catastrophes that interrupt the expected course of events and prevent participants from fulfilling obligations. So, what qualifies as force majeure? So, under the Parental Leave Act, you are entitled to force majeure leave where, for urgent family reasons, your immediate presence is required owing to an injury or illness of a close family member. So, I will give you some example of force majeure. A typical list of a force majeure events might include war, riots, flood, hurricane, typhoon, earthquake, lightning, explosion, strikes, lockouts, slowdowns, prolonged shortage of energy supplies, and acts of state or governmental action prohibiting or implementing any party from performing its respective obligation. So, next is the legitimate business reverses. So, legitimate business reverses should include substantial losses due to fire, robbery, theft, or embezzlement, or other economic reason as determined the Secretary of Finance. So, a reversal is when direction is price that trend has changed from going up to going down or vice versa. Traders try to get out of positions that are aligned with the trend prior to reversal, or they will get out once they see the reversal underway. So, how would the MCIT be recorded for accounting purposes? So, any amount paid as excess minimum corporate income tax should be recorded in the corporation's book as an asset under account titled Deferred Charges MCIT. And that's all of our topic about MCIT. Thank you, ma'am. God bless.